Hi, it's Allie Jordan. Welcome to Secrets to Scale, our look at strategies to help independent advisors drive growth. My guest today is Dan Jones, Vice President of Sales and Marketing at AIK2. AIK2 was built by advisors for advisors to offer business insurance exclusively to wealth managers. This new approach was founded by WAGN and K2 Placements, both leaders in the wealth and insurance space. Dan, I'm so glad to have you on with me today.
Thanks for having me, Allie. I'm excited to be here.
Yeah. So for those advisors that aren't familiar with AIK2, give us some background as to what you guys are doing, why it was founded, and some of the reasons they should check it out.
Absolutely. Yeah, the principle behind AIK2 was to offer property and casualty insurance specific to RIAs while also making it much, much simpler in the buying process. So what we've done is we've gotten rid of the 15-page applications to buy E&O, D&O, ERISA coverage, fiduciary, all of those things. And what we do is we take all of those duties on ourselves and provide that information to the underlying carriers and get all that information to them without having to ask the RIA really almost anything, unless there's a nuance here or there.
I think it's really cool what you guys have built because a lot of that's coming from data, right? So the data is out there in different databases and through ADV information. And so you guys have really found a way to make that easy on the advisor to go through that insurance process.
Yeah, we really have. And as everyone knows, it's a data-driven world. So, we get all of the data from the ADVs. We scour through the ADVs and read those and make sure we have a firm grasp on the RIA. And then with our background and our knowledge of the space, we really understand these firms and what they're doing. And we're able to intelligently tell the underwriters about each firm, portfolio accounting engines that they're using, how they're trading, things of that nature that they previously just didn't understand. So with doing that, we're able to drive down premium, lower retentions, and give more comprehensive coverage specific to the risks of an RIA.
Yeah, I think we went through the process ourselves because if we're going to be talking about it and learning about it, we want to know the process. And that was one of the things I know Trey and I, from when we went through the insurance the first time, was A, just the length of the application. And then B, really, they didn't understand, okay, what an RIA meant, what trade area coverage you actually need. We were a little different in general, but still it was really cool to see what you guys have built, that it is really specific for the wealth space, and your team really understands when we're having a conversation with you what we do and how we do it. You understand that you speak our language. So I think for RIAs out there, it's a huge value add for them to be able to have resources like you all to help them to get the coverage that they need. So one of the things I wanted you to kind of talk through with us is what are something you found that there's additional coverage that you guys have been able to provide for, like some of those trading and portfolio accounting systems that you mentioned?
Yeah, great question. So a lot of times these underwriters, they thought that the RIAs were actually in Excel spreadsheets, fat fingering trades and uploading them to the custodians. Where in reality, most of these firms are using a portfolio accounting engine of some sort, whether it be Envestnet or Black Diamond or Orion or whoever it may have been. And the underwriters just didn't really understand that. So while we were talking to them, we were able to add additional coverages and dig deeper into the policies. And we've added coverages like ERISA. A lot of firms that are managing third-party pension and 401k plans didn't have the proper ERISA coverage in place. So we were able to add that as a free endorsement within our E&O, D&O policies with the underlying carriers, just given the way that they understood these firms to be operating. So there's a lot less risk when you're using outsourced firms like LibertyFi, for example. There's a lot less risk on the trading side, performance reporting, and other errors of that nature. So we've really been able to provide a lot of lift to these firms on the coverages for ERISA, fiduciary, social engineering, and all kinds of cybercrime that are really, really high risk for RIAs in today's world.
Yeah, I think that is just hugely beneficial to the RIA, again, to have someone that really understands what they're doing with their business. So you kind of mentioned some of this, but what now that you've become the expert here, what are the types of insurance that an advisor, an RIA needs to have, and what are some of those policies that you've seen as you've been evaluating that maybe they haven't had in the past that they really should have?
Yeah, two of the biggest things that we've run into is ERISA coverage, which is actually mandatory per the DOL, that a lot of these firms didn't have, but there's really not a great way to provide oversight. So, they didn't know what they didn't know. And another one is social engineering. But every RIA, no matter the size, should have cyber coverage that includes social engineering, ransomware, phishing, wire fraud, all of those coverages that are, again, extremely high risk to an RIA. And then another one is, they got to have the workers' comp, and EPL is a big one as well. So employee practices liability insurance is a huge one in today's world. And talking to these carriers every day and these underwriters, that's one of the most rampant claims right now is EPL claims. So it's very important. And what we've seen is a lot of these RIAs didn't have EPL policies because one, they're very expensive. If you get a standalone policy, they could be thousands of dollars. But what we've done is we've worked with our carrier to provide $250,000 worth of coverage included in your business owner's policy for just a few $100s. So it's very inexpensive, but it still gives you a lot of coverage, even for small firms that only have 2, 3, 4, 5 employees. And then those larger firms that have, tens or dozens of employees, it's probably more realistic to go out and get that standalone EPL. So that, and then including crime coverage, we have up to 100,000 in crime within our BOP policy as well. Again, which is very easy for the firms to get. There's really no questions, and it's all inclusive in that one policy.
That's great. Two follow-up questions I have. Tell me, and I should know this, but go a little deeper into the social engineering policy and what that covers.
Sure. Yeah. So actually, when I was an advisor in my previous life, the first time I wired money to a title company for a client's house down payment, I was so nervous. I was so scared because all I heard about these stories of these hackers getting into emails and pretending to be the client and then sending new instructions that look very, very real to the advisor. So the advisor would get these instructions thinking it came from the client because it was from their email. You would wire the money and that's it. Once you wire money, it's gone. There's no getting it back. So, the first time I did that for a client, I remember it was $500,000 even, and I was so nervous. So there's a lot of protocols in place, but social engineering helps cover that. So it's the hackers getting into emails and pretending to be the client.
Okay.
Yeah. Because and that's an important distinction to make as well, because wiring money on purpose, right? For me, for example, I wired that money on purpose to the title company, whether it was the right person or not. It wasn't an error. It wasn't mischievous, right? I did it. I was supposed to do it, but I did it to the wrong person because of that. So it's a very, important distinction to make between fraud and the money getting taken versus you willingly gave the money to that person.
That's good to know. And as we all know, in this day and age, it's important to double check those instructions. So that makes sense. And I think the other thing that's important on your EPL discussion is, especially in the RA space, there's a lot of times you're with smaller teams, it's a family, you think everything's great until it's not, right? And so I think we've seen that over the past year and a half. And I think to your point, that business owner's policy being able to provide that coverage, because you just never know. You never know what's going to happen. You never know how life events happen and how that affects people. So as much as you love your team and you never think something like that's going to happen, being protected from the business side is important. So I think those are all awesome examples of things that our firms out there need to make sure they're aware of.
Yeah, yeah, absolutely.
So you guys have been at this, for a few months now, and I know I've heard some great success stories. We saw it ourselves, so that was a one for us. But can you talk me through a success story that you think the advisors out there would like to hear?
Sure, sure. Actually, one that comes to mind is a very recent one. We were working with a multi-billion-dollar RIA that's been growing very rapidly. And what ended up happening is, as they acquired other businesses, CPA firms, they own two CPA firms. They own a private fund that they run, and then there's, of course, that mothership, the RIA. What they did, and there was nothing wrong with it. They did exactly what they were supposed to, but they went out and they got separate E&O policies for each acquisition to get that coverage, which they needed to do. But what we were able to help them do was give them a blanket policy over the entire organization to help streamline that and make it much easier for, if claims do come through, it's not ambiguous onto, which policy does that fall under? Which firm did that claim happen from? Was it a shared client? And then, you end up getting in this rigmarole of, well, which policy should take the error? And then you're talking to the underwriters, and it's a whole deal. So what we were able to do was provide a single blanket policy for the entire organization, including all of its subsidiaries. And we lowered their premium by about $25,000 a year.
Wow.
And cut their retentions back by about 50%, in some cases 30% in others, while still giving them that best in class coverage and making it very comprehensive and streamlined for the whole organization. So that one I'm really proud of. I think we did really, really well on that, and it's a great story for us to have.
That's a great story for you guys, and what a great story for that firm. I can't imagine if they had a situation where they were having to deal with all of those multiple policies and insurance carriers, fighting about who actually did it and where it I mean, that just sounds like a nightmare. So I'm sure they are thrilled with what you guys came up with.
Yeah, that was a big positive. They were very excited, and we're excited to work with them. And they're even creating an internal risk team that we're going to sit on. Just to help consult with them as they move forward and grow, and not only organically but inorganically, to help keep their risks as low as we can, and make sure they're covered.
I love that story. I love that. Okay, our last question that we ask all of our guests is, what is your number one tip for advisors looking to scale?
That is a great question. I would say over the last decade, as many as RIAs as I've spoken to and consulted with, I think the best tip I can provide an RIA that wants to grow is to outsource all non-essential, non-client facing, non-revenue generating duties to a third party. For example, LibertyFi, that's a perfect example, right? Have LibertyFi take over. They're the experts on the portfolio accounting system. Have them do all of that, all of the billing, any investment management, outsource that. You're not going to compete with Vanguard and Schwab as a RIA, right? So outsource that to firms like Wealth Shield and others. Compliance oversight, all of your compliance to firms like Advisor Assist and others. So yeah, I think my number one tip as an RIA that wants to grow efficiently and quickly, but also properly, is outsource non-essential duties.
Couldn't agree more with you, obviously, on that one. So I appreciate that. And I would say it goes well. You and I, we've now worked together almost 10 years in lots of different ways. And so obviously being like-minded in that has been a common theme of our professional relationship. So I think, to your point, an RA that's just doing business as is, they can continue doing that and they're going to do just fine. But for those that are really looking to accelerate growth, there's a lot of great partners in our space that can help them do that. So I really appreciate your insights because you have spent a ton of time with a lot of different RAs out there. So.
Yeah, I think that's key to accelerated growth is, do what you do best and let others do what they're best at. So.
Well, I'm so excited for everyone to hear about AIK2. What you guys are doing in the industry is so disruptive and so good for those advisors out there. That's why I really like it, is because you really are benefiting them. You're making it easier on them. You're giving them more coverage at a reasonable rate. So we really appreciate what you guys are doing, and we'll keep watching your continued success.
Yeah, I love it. I appreciate the time, and always appreciate being there with you and watching your success as well.
Well, thanks everyone for tuning in, and we look forward to seeing you on the next Secrets to Scale.
Bye-bye.